good morning, good evening, depending on where you're from. I just ask everyone if you just put yourselves on mute, please. Just to help us with the sound quality as we go through. My name is Jeffrey Asselstein. I'm co-founder of Society International, and today I'm joined by, I would say co-founder, but actually the whole genesis and the idea of Society was Alexander Hartman. So my partner in Society is with us as well, and we're very happily joined by three good friends and good partners within the group: Noah from Select Properties, Afsor from Druce, and Eunice from PFI in the UK. And we're covering, well, we're focusing today on the UK with our topic of UK real estate, why timing is everything right now. We're actually in 4 different countries. So I'm in Canada as we speak, Alexander in Doha, Eunice and Afsor in the UK, and Noah in Dubai. So as much as I know you haven't really come to listen to me to introduce people, so I'll quickly introduce and then we'll pass over to you, Noah. So Noah, if you want to share your screen and take us away.
Absolutely. Right, I hope everyone can see this okay. Good afternoon, guys.
Perfectly. Yep.
My name is Noah Aribi, and I'm representing Select Property. Just a bit about myself. I've got over 8 years experience in the UK property market, but specifically helping international investors invest into the UK property market. So we're a leading UK property developer. We founded in 2004, so we've been in business for over 20 years. We have offices all over the globe. So our head office is situated in Manchester. We've got an office here in Dubai, Shanghai, Hong Kong, and just recently, about 2 months ago, actually, we've opened up our office in Riyadh, and yeah, that's had loads of transactions. We've sold over £3 billion worth of property and given out over £280 million to global investors. What we offer at Select Property is very unique. So we develop developments, we sell them to our investors, and then we go ahead and manage that property for them. But one thing that we do, which I find very unique, is we do an after-sale services after we manage that property. However long the owner owns the property, let's say, for example, they've had it for 5 years or 10 years, we will actually help that investor sell their property in the future for them, rather than just giving it to an agent. So we'll handle that whole transaction from start to finish. So the attraction for UK property investments for international investors is it's a stable market. It consistently grows. Essentially you put your money and you'll know that will grow over time. It's one of the most regulated markets in the world in terms of a legal perspective. The exchange rates are very favorable. So for example, we have a lot of investors who are situated in Turkey, where the Turkish lira is dropping, and also in Nigeria, where the currency there is dropping, and they've taken money out and put it into the UK, where you can see more of a stable asset. One thing also that's very important is the world-class universities. A lot of our investors are planning for their future for their children, and it's very good points to sort of enter quite early on and see that capital grow over time. And what we tend to see is a lot of them over 5 to 7 years sell that property and use those funds to fund the university fees. Our developments and where we as developers situate ourselves in is in Birmingham City Centre. It's the UK's second largest city after London, of course. And one of the standout reasons I'd say, and when I speak to investors, to be honest, the most important thing is, which has got the city to rise, is the HS2. The high-speed train, the bullet train, is going to be connecting London to Birmingham in under 49 minutes. So that's drastically changed the scope of Birmingham City Centre. And studies show that if you invest in a property where new transportation are being built, your property value can grow anywhere between 30 to 90%. So that's very, very important when it comes towards the fundamentals of investing. And 90% of the UK can be accessed in less than 24 hours. We also see, since the introduction of HS2 being constructed, we've seen the likes of PwC, which now has over 3,500 staff there. We've seen HSBC that moved their UK headquarters from Canary Wharf in London to Birmingham City Centre, with the likes of Deutsche Bank, KPMG, Deloitte. Goldman Sachs currently have around 400 staff with capacity to fill over 3,500 staff. So it's very, very important within the city of Birmingham. So Birmingham's property market, the expected rental market growth is expected to increase by 18% between 2025 to 2029, and 24% sales growth predicted between 25 to 29. Now, Manchester. So Birmingham is the second largest city in the UK. Manchester, economically, you could say, is the second largest city. It's also what is called the capital of the North. So yeah, like I said, it's the UK's second largest economy. It has one of the major universities in the UK, particularly the University of Manchester and Manchester Metropolitan University. And typically you'd find that there's over 100,000 students in Manchester, and 51% of those students stay behind for job prospects, which is also very, very important. Manchester City Centres also has a £1 billion regeneration plan, which is going to absolutely transform the city. But what we've also seen, which is quite important, is the property prices have increased by 40% in the last 5 years. So there's already proven growth and continued growth. We're looking at a similar in terms of rental market growth in Manchester City Centre and Birmingham City Centre, so roughly around 18.8% between now and 2029, and a 22% increase in capital appreciation between 2025 and 2029. So yeah, what we offer at Select Property is the fully managed experience. We first have a property consultation, and after that consultation, once we've gotten a full understanding of what your requirements are and what your goals are for the next 5, 10, 15, 20 years, we'll suggest to you some apartments. We offer an after-sale support as well as mortgage recommendations. We also can help with Sharia-compliant mortgages. And then once you've chosen your specific apartment, and let's say you've chosen an off-plan property that is ready in 2028, for example, we'll be with you throughout the sales process, updating you every quarter of how the bill's doing, and then come closer around 6 to 9 months to completion. We'll do the handover with you. Like I said earlier and at the start of the meeting, we'll do we have a fully managed service and the exit strategy. Yes, thank you very much, guys.
No, thank you. I really appreciate that. Although I'm Canadian and I've lived overseas a long time, I've also personally invested in the UK. I'm just going to ask you one quick question, if I may.
Yeah.
As you appreciate living in Dubai, headlines tend to dominate discussions, right, with what we see in the press. And a lot of times we're seeing, comments about the number of people moving from the UK to Dubai, with something you and I hear all the time. But we know that the real estate market in the UK continues to be very strong. Both things can be true, that certain people can leave the country, other people are moving in, and you've certainly put up some of the key drivers. What do you see as what would you say would be the main driver why people keep investing in the UK and values keep increasing?
I think one of the main things, if you really just take everything out and just look at the basics, and the basics towards investing is currently in the UK, even if people are leaving, there is still more people than there are property. And that's been going on for well over 50 years. There's a huge shortage of housing. So that's what I would say is one of the main fundamentals towards people investing and that asset growing over time.
Yeah, thank you for that. For those that are listening, this wasn't scripted. I actually have the same feeling. It's very simple. They're not building enough houses, and since I've been following it, not quite for 50, but I've been following the market for 30 years. That's always been the case, and I don't see that changing. So no, thank you so much. And again, thank you for coming in to support us today. Afsor from Druce, all yours, sir. If you want to, so if you want to pull your screen down and Afsor pull yourself up, then we can move on from there.
Hi everyone. Right, let me share my screen. Right, let's do this. And go back here. Oops. Click on that. And go back to screen share. I don't know why I'm doing this again. Make that big and go back here. There we go. All right, so hopefully you can all see. Can you all see my screen? Yeah, you can. Yeah, excellent. Okay. So hi everyone. So I'm Afsor. I'm from Druces LLP. We are a law firm. We were founded in 1767. So that's about 250 years ago. So it's a very old law firm, one of the oldest law firms in the UK, in fact. So yeah, we are, although we are, very old, of course, we still have a very modern, forward-looking approach. We cover comprehensive legal services across corporate, commercial, real estate, dispute resolution, and private wealth. Just a brief background on who I am. I'm a partner in the real estate team. I also specialize in Islamic finance. I've been working in law for just over 12 or 13 years now. I forget how long it's been. And I specialize both in commercial and residential property. 90% of my client base, I'd say, is across the Middle East. So that's from Kuwait, Qatar, Saudi, and Dubai. And predominantly, those clients are investing in UK real estate. And I've been doing that work, for the last 13 years now. I'm an established voice in Islamic finance. I regularly write articles. I attend closed roundtable events, and I also appear on TV regularly in the UK. I'm going to quickly just briefly run through our various practice areas. I'm not going to go through this in great detail, but I've mentioned real estate. So that sets out the various types of real estate that we do, both commercial property, construction, planning, syndicated property investment. We also advise on tax as well. Then in corporate commercial, that's full range of corporate and commercial services, from banking and finance, corporate tax, capital markets, mergers and acquisitions, employment, business, immigration. Private wealth, so we cover the full range of private wealth services. That's court protection, estate planning, powers of attorney, probate and estate administration. Dispute resolution, again, full range of dispute resolution. In fact, our commercial litigation team also regularly arbitrate in the DIFC as well. So rather than going through everything, I thought I'm going to focus just on three primary topics. The first one is just doing a very brief overview on how the English or the UK framework works for property due diligence. I'll then touch upon two topics, one being the way in which the land registry works, and also touching upon the solicitor's accounts rules, because I think those things are the two primary things which international investors are typically nervous about. So just quickly going through the legal overview of real estate transactions. So the first step is obviously the client onboarding. That's any UK law firm has to do the KYC, AML, making sure that the client is who they are, and making sure that there's a clear trail of source of funds and source of wealth. The first step in any transaction is the contracts are received from the seller's lawyers, and at that point, lawyers will engage and review the contract and also they'll undertake property due diligence, which is step 3. If you're taking finance out from any third-party finance lender, or if you've got a broker involved, they will also deal with any financing issues. Once we've sorted out all the property due diligence, we've looked through everything and we're happy with everything, and also importantly, the investor is also happy with everything, we'll then proceed to exchanging contracts. At that point, you're legally committed to buy the property and the seller is legally committed to sell the property. We'll then set a date for completion, which is point 6, at which point that will be the handover date, where the seller will formally hand the property over and transfer the property into the buyer's name. And after that happens, the funds are sort of transferred over. We'll deal with registration. That entire process takes about 6 to 8 weeks. I've done it quicker than that. I've done it longer than that. It all depends on how complicated the asset is, and also any issues that are revealed in the property due diligence. Okay, I appreciate I'm going quite fast, so apologies in advance, but I'm just trying to give you a brief flavour as to how it works in the UK. Okay, so the second topic was the UK Land Registry. Just to go through that quickly. So the UK Land Registry, just to mention here, is probably one of the most robust legal frameworks across the world, I would say. And the key points are, number one, once your interest is registered with the land registry, that's guaranteed ownership. Okay, so you got legal certainty. Once it's registered, the ownership of your land is proper. Of your land or property is state backed, meaning that the government guarantees the accuracy of the register. If for any reason that was challenged, then there's compensation which the UK Land Registry will offer the affected party. It's extremely difficult to challenge the ownership of registered land. So once it's registered, the property is yours. Okay. Transparency and accessibility. Again, the UK Land Registry is publicly accessible. The records are available for anyone to access. It says £3. Actually, it's now £7 for a title register. The Land Registry, they publish ownership, prices, transactions, and these are all available online. Okay. I mentioned again digital innovation. So property transactions can be completed fully online. These days, we also have the UK Land Registry supports digital deeds and identity verification. This obviously supports economic and legal stability, because it gives the investor that security that once they are registered, that those property rights are enforceable. Okay. It also allows lending to be easier. Mortgage lenders rely heavily on the registry's guaranteed data, and again, it reduces fraud because of the comprehensive checks and alerts like Property Alert, which protects owners from title fraud. Okay. Comprehensive coverage, over 87% of the land in England and Wales is now registered. That's nearly 26 million titles. The goal is 100% registration, which will create a complete and authoritative record of ownership. And the Land Registry also holds historic data, so records go back decades, sometimes centuries, of old historic deeds from going back sort of for a very long time ago. And the data is standardized and updated continually, making it highly reliable for legal and research purposes. Okay, so that's just the UK Land Registry, and I hope that will demonstrate to you how secure and protected that is. Okay. Now, moving on to the second topic is solicitors' accounts. Now, again, there's a lot of nervousness as to when an international investor is investing in UK property. How is their money secure? How can they ensure that those monies that they send over won't be fiddled with? And in the UK, the important aspect that we have here is that you will use solicitors for the transactions, right? So the seller will have a solicitor in place, and the buyer will also have a solicitor in place. And now what that ensures is that your money is protected. The investor's money that's going into the accounts is all protected. Under UK law, all law firms are required to have solicitors' accounts. Okay, and the key points here, I've mentioned 6. Number one, the client must be the client money must be kept separate. Okay, so a UK law firm has to have a separate client account and a office account, so they can't meddle or mix funds, for example. So if I'm paying for my office bills, for example, I can't pay that out of client money. So I can't just use client money and pay for our costs. No, the client money has to be kept separate away from office money. So that's the first point. The second point is that the solicitor's account is under strict regulation by the SRA. Okay, so the Solicitors Regulation Authority, which is the all law firms governing regulator, they monitor how the monies in the solicitor's account is used. Any penny that we use from the solicitors, from the client account, has to be justified as to why we've used it, and that we've told the client that we've used it for that purpose. Something, if when the regular audits are done, if any pound or penny is used without the client being informed, the firms are heavily scrutinized and penalized, and in fact, it can lead to the firms losing the license to practice as well. So that comes to the third point: regular independent audits. The SRA regularly audit our accounts to make sure that we are using our accounts properly, to make sure that we are informing our clients as and when we draw money out. So we can only draw money out if we're using them to pay invoices related to client matters, or if we are paying bills. But again, before we can bill any matter, the client has to be informed exactly how much we billed and why we billed it. Okay. Daily reconciliation and record keeping. Again, on a daily basis, all monies that are going in and out of client account is all reconciled, and the records are kept fully updated. So our client can at any point say, can I have a printout of the ledger or a PDF of my ledger to see where the money is being spent? And we have to give that record to you immediately. Compensation and safety nets. The SRA have a compensation fund. So if, for example, if any client is wronged, or if any client loses money whilst using a law firm, then there's a compensation fund which pays out to clients. Okay, and finally, client consent and transparency. As I mentioned earlier, we cannot use any funds in our client account without the clients knowing about it. So your monies and the monies from investors are very secure in that way, and that is why we can transact easily, because clients know that they've got that security and protection in place when they are using UK law firms to transact. That's it. I mean, I've run through that quite quickly, so I have to apologize again. Some of the topics we can spend hours on discussing. Solicitors' accounts, for example, there's an entire module which, as lawyers, we had to go through and be examined on. So apologies in advance. Hopefully, maybe we can share the slides afterwards for further reading. But other than that, I open up to any questions, Jeffrey or anyone else.
Thank you, Afsar. I really appreciate that. And for all those that are listening in, we'll definitely share the slides. I share a recording of this webinar, of course, and the slides as well. I think, again, for those that may be more Middle East based, we often find it very strange that a lot of transactions are done without a solicitor. Even as a broker myself in Qatar and in Dubai, I really wish solicitors were involved, because it puts a lot of pressure on the brokers. So it's good to. I've always thought, kind of coming back to my question with Noah, I've always thought for a lot of international investors, one of the key pillars of investing in the UK at any time is the rule of law, is having that stability, knowing that you have rights and you have a process that's followed, and that you're always well protected. So thank you for that. I really appreciated all the detail. And again, we'll leave it at the end. Maybe, Alexander, if there's any questions from the floor, you can share with us. Yunus, if you want to pull up your slides and take us away.
Good afternoon, everyone. Thank you, Jeffrey, for the introduction. Great to be here with Society International. It's my first time doing one of these webinars, so let's see how I get on. Unlike Noah and Afsar, they seem like pros at this. So, yeah. So our firm is called Focus Property Investments. I'm just going to pull the screen up. Okay. Right. So, and Right. Okay. Yeah. Hopefully everybody can see that. So yeah, we're based here in the UK, and we specialize in sourcing, developing, managing residential and commercial value-add assets for overseas investors. In essence, we act as a strategic partner for those seeking to build exposure to the UK property market in the most streamlined and efficient way. We have a number of partner offices, as you can see here, and Middle East being our sort of strong point, along with Turkey also as well. I'll move over to the next slide. So a little bit there about us. I mean, we're based here in the UK, and we support overseas investors either to buy stabilized income-producing assets to add to their portfolios, or enter them into the UK sort of fresh and new, and throughout the UK. Although London is our strong point, 80% of our transactions are pretty much based in London. Our leadership team together have in excess of 50 years of experience there. So myself, which will be on the next slide, myself is, I think I've just, is my 23rd year. So I started back in 2002. We have all the connections here. You know, Druces is one of our associate partners for the solicitors and all the legal side of things. But along with that, you know, we got all the surveyors, financial institution, tax advisors, architects, builders, planning consultants, agents, and these relationships enable us to act swiftly and capitalize on the opportunities when they arise. There's myself, so I'm the operating officer in the company, and as I say, 23 years I've been doing this. And yes, I've probably seen over 300 projects, I think, in total across the UK, starting from small to medium to large. We also have developed projects. And I say, as the partners, they have more than 50 years sort of combined, and probably in terms of sales, including all assets, more than in excess of 5 billion. Our services are deal sourcing, due diligence across the UK, full project delivery from acquisition to exit. On the legal side, as mentioned, Druces are there. We also bring in the tax advisors, help with the company setup and structures, onshore, offshore, financing, again, Sharia, non-Sharia. When we are developing, we are providing a turnkey management there. And it's all a hands-off approach, and the investors are in 100% ownership. Why timing is so important? Well, a few points have probably been mentioned and sort of talked about already with Noah and Afzal. We see the next 12 to 24 months being very, very important, very strategic, and a lot of money is coming into the UK. Interest rates are set to decline. The cost of lending then would be anticipated to become more favorable. Here, our slogan is, you make your profit when you buy, not when you sell. Getting the timing right now, entering before the crowd, you know, allows better pricing, stronger yields, and superior long-term performance. We concentrate on regeneration, infrastructure areas where there's driving demand. The types of projects we look at, most of the time, they are having value-add potential. You know, whether they're developments or they're refurbishments. I'll have a slide a little bit later on. I'll show you of an existing of a project that we've just acquired literally this week, just to give you an example there. So from end-to-end service, we are here absolutely handling everything on the ground and aligned with long-term investor objectives. So the UK market overview, wealth migration. While the UK, as we know, it seems like we're in a doom and gloom here. High net worths, wealthy individuals, you know, they're leaving the UK to go to other jurisdictions. This has simultaneously created opportunities. A growing number of attractive assets are coming on the market at compelling prices. I mean, if we take central London, prime central London, which is not our core market, but it is part of our services, residential homes and apartments there are down by 25-30%. So you can really get a good deal. And we've been seeing this year a lot of Indian nationalities, USA nationalities coming in and buying those assets. Although the rich are leaving, the UK remains highly populated. 75 million people is the population, I believe, at the current time. And what's been mentioned before is that the country is facing a significant undersupply. I mean, I put 2 decades there, but you've heard Noah, Jeffrey mention 3 decades, 5, even up to 5 decades. So certainly, I've been in the industry just over 2 decades, and I'm seeing a shortage continuously. Labour government came in last year, and as you might know, they want to try and deliver 1.5 million homes over the next 5 years. So that's 300,000 homes per year, which every government's been going on about, but they're barely delivering 200,000 homes per year. So a huge shortfall. Again, they talked about the currency. I think Noah did on his slides. On my side, the pound is at historic lows. I remember 10 years ago, the pound used to trade around 1.5 against the US dollar. The Brexit announcement came in 2016, and since then it's sort of dropped, low as 1.2 and even lower, where now I think currently it's floating around about 1.3 against the dollar. So that's definitely an advantage. So we have a single case study here. It's one of our smaller assets. It's kind of entry-level stuff that we do, and I'll take you through to the slide. So this is part of a overseas investor. He has a £20 million fund. Just a few months ago, he was introduced to us through one of our wealth partners based overseas. And so he has 20 million, and we have to find him assets, especially assets with value add. So what we've done here in London, Southeast London, we bought a mixed-use building. Currently, it's producing 6.5% income, and we're going to do some developments to it on the upper floors where we can extend and create 8 apartments. And that work is probably going to take about 10 months or so, which should start from February, end of January, February, as we've only just completed on the property. Once those 8 units are done, we are not looking to rent those out traditionally, just sort of under a tenancy, but to be more creative, have a service accommodation type of running there, or an Airbnb, and this will certainly give a lot more yield and increase the asset value. So here we are, a couple of pictures. Hopefully you should be able to see that. So this whole block we've purchased for our investor, part of this 20 million fund, and I'll go into the numbers on the next slide. So you can see here, so it's quite a good footprint, and the client is very happy with this acquisition. And I say the ground floor is all income producing. I think there was about 8 or 10 units there, which is good. So they're all income producing and paying rent. So it's in Eltham, it's on the high street. The building's quite significant, actually. It'll be 100 years old in 4 years, or 2030. It was built in 1930, this building, and the arcade. So it's locally listed. So on the floor, in fact, there's 13 shops here. And then you've got floor 1, floor 2, which has got offices, but they're empty. And it comes with planning permission to convert to 8 apartments. Total building size is about 1,227 square meters. And you can see the other notes here. And I say it's located on a prominent high street, and you've got sort of big names around you. You've got Sainsbury's, Cinema, Nando's, Pizza Express, and so on. Yeah, is a bit of an investment summary, so you can see there, and these slides will be also shared. So this is your acquisition price. These are your costs there to acquire this building. We have a projected spend of just under a million, or about $1 million, to create the upper 2 floors into 8 units. And as I say, that's going to probably take about 10 to 12 months maximum, so all of next year. And once that's done, it should have a capital value of almost 4.5 million. We're not looking to sell at that point, but if we did, if we were flipping this, a couple of fees are here. There's some agents' fees, legal fees, and it leaves you a net profit. So cash on cash, this is a cash purchase, no finance at the moment. You're looking at sort of 18% profit in a 12-month window if you're looking to do this to flip on and to sell. And the yield is going to go from 6.5% right up to about 10% on cost. So it's a very good deal. Really excited, and this is one of 6 deals that we have bought for this client over the last 2 months, and we still have a bit more money to spend for them, and we're hoping to do that in the next month or two. So yeah, I think that's me done. I shall stop sharing this screen. Just do that.
Thanks very much for that. I have to say the last figures you said are truly impressive. When people generally think of the UK, they think low yields, particularly central London. Often people will be quoting 2 and 3%. And this particular project you're looking at the end on the cost base at a 10% gross yield. That's really impressive.
Absolutely, it's what we've been doing, and it's what we've been doing for the last 20 odd years. Is creating value like this. I mean, we have clients who want assets in central London that are those 2-3%, especially on residential. We have clients that want to buy core investments that on commercial could be sort of 5% yield around London. But if we go outside of London, we are typically buying a lot of commercial investments, 7, 8, 9, and even up to 10%. So ready-made investments without even doing any work to them. We can find and source those for our international clients. So it gives us a real edge, really. It's great.
Amazing. Thank you very much for that.
Yes,
Alexander, I leave the last word to you, sir. Do you have anything you want to share from your side, or any questions that you want to share from the group? I leave it to you, Alexander.
Yeah. Thank you very much, Jeffrey. Gentlemen, from my side, really appreciate your presentation. And in fact, there are just 1 or 2 questions. One, Noah, is actually for you. Now you have mentioned the housing market remains very strong. Yeah, I think it's very comparable with Germany. Yeah, you have a lot of you have more renters than owners. Yeah. And is there do you guys foresee any change in this behavior, or do you as a company, do you rather continue to see that the people in the UK will continue to rent their apartments?
Yeah, good question. We're actually seeing now, particularly from the new generation and the younger population, more and more of them are preferring to rent than to purchase. That's what we're seeing. They typically want more of a lifestyle of living rather than find the cheapest place and save up to buy. That's what we're seeing. I mean, 15, 20, even 30 years ago, the whole goal was save as much as you can, and then buy your first home and then build your wealth through there. But there's so many ways to make money now that the younger generation aren't putting full focus to it, which comes at an advantage when investing, because then as an investor, you're able to control how much you want to rent that property out for in the future.
All right. I agree. I mean, for my side, I can see the same in Germany. Yeah, much more flexible living. Yeah, young generation. They also job-wise, because today you don't count anymore like you will stay in one place for the next 30 years. That's rather the life requires more flexibility. Yeah. So yeah, great. Thank you very much. Afsar, you have mentioned the Islamic finance available here, that you advise on Islamic finance. Can you just work out shortly what are the main differentiators between conventional banking and Islamic finance?
How long do you have? So look, with Islamic finance, you've got different structured and products that are available. So if I run through the two main structures that are currently being used, the first one is a leasing type arrangement where the financer or the lender, if you like, the lender or the bank and the individual will buy the asset together. So, for example, if the lender puts in 80%, the individual or the company puts in 20%. They'll own the asset together, and the instead of charging interest, which is against Islamic finance, the lender will charge profit, if you like, or rent on a monthly basis if it's amortizing. And each month the individual will pay the rent and plus the acquisition payment. And at the end of the term, the individual will then own the asset because they would have paid back the lender for the 80%, and the lender will transfer the property into the individual's name by themselves. That's one type of Islamic finance arrangement which avoids interest, and that's called the diminishing musharaka. It's also called ijara, which is used in the UK, and I believe is also used in Dubai and other parts of the Middle East for financing. The other type of financing which is available, which is becoming more and more popular, which is called a commodity murabaha, or a commodity trade. And that the way that works is it looks exactly like a conventional financing arrangement. So you will own the property will be in your name, there'll be a legal charge at the end of it. But the way that it becomes Sharia compliant is that at the end of the trade that happens, so the lender will buy commodities, for example. So let's say, for example, they buy metals, they'll buy them for, let's say the financing was £1 million, so they'll buy them for £1 million, but they'll agree to sell it back to you for, I don't know, 1.2 million, and they will sell the metal immediately. And then the profit which was agreed, which is 1.2, you will pay the lender back for that. So what happens there is that they're not doing a money for money exchange. So under Islamic finance, for example, I can't lend someone £10 and say, you give me £15 back. There has to be a trade that happens in the middle, which is where the bank takes the risk effectively, or the lender takes the risk, albeit it's a very small risk. So by the end of it, you're left with exactly how it would look on a conventional financing, albeit there's been that trade that happens in the background. That's Islamic finance, two structures in a very, very short, I think that was 2 minutes. Of course, you know, both those topics need a lot more time to properly flesh out.
Sure. Thank you very much. Yeah, thank you very much. Clear for everybody now. Good. Jeffrey, I think that was a wonderful event today, and definitely something we should organize again.
Indeed. Thank you very much, everybody, again for attending. To Noah, Afsar, and Yunus, thank you, gentlemen. And we look for this becoming a continuing series. We'll be focusing on different markets over time, and wish you all a great day ahead.
Thank you.
Absolutely.
Take care, everyone.
Thank you very much.
Thank you.
Bye-bye.
Thank you. Cheers.
Bye-bye.
Thank you.